Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Thursday edition of PreMarket Prep, brought to you by Thinkorswim and TD Ameritrade. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. We got another earnings parade today. What's the number? It's 247 stocks reporting earnings today. So we're going to try to cover the big ones from yesterday after close and today before the bell. We got FFIV, Tesla, Buffalo Wild Wings, Bristol Myers, Twitter, Ford, Celgene, Groupon. So we're going to try to get to all that. There's a few notable ratings changes as well. Of course, we got to preview the big earnings from later today, and we're going to also recap. Joel and Dennis had some pretty good calls yesterday on Chipotle. We're going to talk about that and Boeing and what happened there yesterday after the show. Joel, how are we doing in the S&Ps this morning?
We're doing okay this morning, Spencer. Trading up on nearly 6 points here, just hanging out at Wednesday's highs, 2140. That's our big level to hold. Above that, 2145, coming back on the downside. 2135, the close. Pre-market low, we're nearly 11 points off that. Wild day in crude yesterday, got a lift off. The inventory numbers came all the way back down. You can see the action in that. Still holding above 49. 49 is your key support level. Gold and silver trading up, but still in a trading range. Let's get to some of those 247 earnings reports.
247 stocks. So again, we'll just let the chat know if you want to talk about any specific stock that we don't get a chance to cover. Type it in the chat and we will try to get to it. But we will go to the big guns. And the biggest gun from last night was the Tesla report. Everybody watching TSLA. And you know what? Those straddle writers there, they win again here. Well, at least seem to be winning at least so far. Because it was $11, wasn't it, when we priced it out yesterday, Joel? And it's only trading up 9.
Yeah.
Those guys know what they're doing.
Yeah, they do. It's so hard. I looked at some premium on some other things too that had earnings today, and I just couldn't bring myself to pay up that kind of premium. Sometimes, if you're wrong, you're dead meat. If you're right, you got to be really right. You got a nice spike up here in Tesla, the 213 even, giving back a couple of those points already. Little double top I'll be keeping an eye on, just above 213 at 1332 and 1350. That's your resistance in Tesla.
Spencer, give us those Tesla numbers here, and then we'll jump into the Solar City technicals too, because we know Solar City is trading off of Tesla.
Yeah, they're good. Q3 EPS 14 cents versus 9 cents. Adjusted EPS 71 cents. Sales 2.3 billion versus 2.35 billion. Q3 deliveries up 114% year over year to about 25,000. They maintain their outlook for the 50,000 new vehicles during the second half of the season. They see their Q4 deliveries just over 25,000 units. They were trading up after that. They also said they're looking to increase terms with suppliers.
So obviously not only Tesla trading up, but Solar City, which still has the merger on the table, is trading up off of the Tesla report here. SCTY has been getting some life lately. I think there's a lot of people who think this deal actually is going to go through, which maybe it does. Stock is trading up 70 cents here in the pre-market. Joel, give us one number here. We got to stick you to one number. So many levels and so many stuff you can look at, but there's so many stocks today.
21.
One number.
21.
$21 on Solar City. Okay, that's the level that Joel is giving you for that. But keep an eye on Tesla if you're trading Solar City. Also reporting here this morning, so jumping all over the place. Twitter reports, and Twitter cutting 9% of the workforce, so 1% more than they said originally here. But Spencer, give us the details. How's the Twitter report looking?
Twitter Q3 adjusted EPS 13 cents versus 9 cents, looking good. Sales 616 million versus 605.8 million, looking good there. MAUs up 4 million quarter over quarter, 317 versus 313 in the last quarter. Like you said, they're cutting the workforce by 9%. They do see their fiscal year adjusted EBITDA of $700 to $715 million, and that is the story on Twitter. They like it.
They like it right now. 1.9 million shares too. So this is a lot of volume trading with it right now here too. So keep an eye on it, Joel. Give us that level because you gave us a level on the number yesterday, and that number is still in play.
It still is, and I still like that level. There is a double top at 18.35 and 37. The initial pre-market spike up to 18.50. So, this is going to be a tough one to play here. It's going to be opening right at that level. We'll see. I mean, you go 1830, 1840, 1850. I think we're good. You open up at 1830 and you're back under 18. Then I think you just get to grind at 18. But nice little pop there, benefiting from the Olympics and also the presidential debates. And good quarter here. Let's see if it's enough to get it above 1835.
That's the
Don't
level
forget
too.
hurricanes. Don't forget or
Oh, a
tornadoes.
few hurricanes.
Tornadoes.
Yeah,
That's
yeah.
what
They warned you about the
I meant
tornadoes.
tornadoes.
That's why I got bullish all Twitter there. Now I'm sitting here and I don't own shares, and obviously today I'm regretting not owning shares, but sitting back and watching. The problem is I don't think anybody's coming to the table when they're cutting 9% of the workforce, 1% more. They're cutting expenses, trying to get profitable. They're trying to do it here on their own, and that's scary for me as a shareholder because if I was a shareholder, because obviously, we were hoping for a takeover in the 20s, and it just doesn't look like it's materialized. And when the dust settles from this report, which is okay, it's an okay report here. I just think valuation is still an issue here with Twitter.
Look what they wanted you to pay for the 17 calls yesterday.
What were they?
They went off the board at 113, 117. So
Yeah, so there you are. You've got the direction right. You buy the calls, and you're not even making money yet. It's so difficult to make money buying options, and that's why we're gonna have Nick Shaheen here next month. He'll tell us how to make money selling options because that's how he works it. Because I've never had luck making money buying options either. I used to do a lot of covered call writing on my investment portfolio there. I haven't done a lot of it lately. I mean, it works really well in a sideways market. It doesn't work that well in a bull market because you get getting called away on all your stocks. And in a bear market, it's horrible. So that's what the covered call rating. But Nick does them a little bit different. He has credit put spreads, his credit call spreads. He's bringing in money and bringing in income every month. And we'll see him out here in the Motor City on November the 12th.
all right, S&Ps, are they open here? All I see is like 39 and a half, 39.75. Quiet morning here.
Don't you know all the overnight? It's all overnight move. So when you're sleeping between 8 p.m., well, I don't know who would go sleep at 8 p.m., but when you're sleeping around midnight, that's when we get all the moves usually. So, anyways, that's just a little sarcasm, but it seems to be true a lot of times too, where it just opens up and then it kind of hangs out there all day. So, let's move back to a few other earnings report here. We have Ford. Ford reported
Ford's.
earnings, and I don't think anybody was going to get excited because GM blew it away and the stock went straight down. So, how'd Ford do?
It's kind of the same story. Q3 adjusted EPS 26 cents, beat by 6 cents. Sales 35.9 billion versus 33.15. So they beat on the top, beat on the bottom, but does it really matter?
Nope, because they just don't like the stock. And I have no idea why, but the market has hated these issues for a long time. Joel, did this get any pop at all on these
Yeah, it
earnings?
did.
Or?
It did. As you can see here, it got up to 12.02, and then that rally was snuffed out back at 11.70. Just sitting here, folks. Low of the move, 11.69, traded down 18 cents, opening right into support here. This should be an interesting one. Just no love for these auto stocks on Monday. We're going to have our auto analyst, Michelle Krebs, on, and I sent her an email. I said, oh, man, same, song remains the same. GM, good earnings. They pop and drop. And she goes, yeah, and Tesla loses money and is rewarded. So
It's craziness. And that and whatever. So maybe Tesla's going to take over. But let's just go look at the market caps here because I think it's a matter of time. It seems like that this market, as crazy as it is, that Tesla's going to have a bigger market cap than Ford. Tesla market cap as of yesterday, that's without the thing, was $30 billion. Ford market cap now, just grabbing the Ford market cap, is $47 billion. And General Motors market cap, going over to the other one, is $48 billion. So here it is, over two-thirds of the valuation. If Tesla obviously has a 20% run and Ford and GM pull back 10%, there you go. Tesla would have the same market cap as Ford and GM, which seems asinine to me.
Yeah. I mean, we could talk about this ad nauseum. I mean, what's going on with these stocks, but you get the dividend with the GM and Ford. Haven't heard Mr. Buffett talking about his GM stake lately. So if he adds to it, he adds to it. If he dumps it, then that stock's really going to get hurt. But just, did it, when did GM, when it re-IPO'd, wasn't it right at this level? I mean, is this stock on
Yeah, around here. I think it was.
Yeah, let me
And
see.
Ford was the only one like it didn't, go into chapter 11 there. And obviously, Ford, it survived on its own and it got down to $1 and came back up. We know GM shareholders lost everything and then the debt holders became the shareholders. And obviously now it's not, laden with as much debt as it was before, which is why these companies can finally start to make some money. But it doesn't even seem to matter if they make money, Joel, because they're just not loved by the street.
Okay. All right. Let's see what else.
Celgene, CELG, we saw a good report, and it's been working here to take the cue from the leaders lately. Like GM, if you were taking the cue, you could have made some money on Ford here. Well, if you were taking the cue from Biogen yesterday, and we know they're different companies, but they're still drug stocks, so they often respond in the same ways. Biogen had a nice run off its earnings yesterday, went up to the critical $300 level, kind of failed there, but still a nice pop for Biogen on its earnings. And Celgene this morning reporting earnings here and getting a 3% left.
Yeah, and Biogen did sell off a little bit. I am taking a look at that, but still had a nice gain on the day. Looking at Celgene, CELG, we've hit 102, and you know what, Dennis? We're just hanging up here at 102, so this could be one of those earnings that they get up there, they make the high. We're over $100 here. I'm not seeing much at 102, an old triple top at 101. I like this thing holding 101 to go north. And Dennis, I know you've been kind of dreading this segment of the show here, but let's talk about one earnings play from yesterday. Boeing.
Boeing, I know. Joel wins again. He gets so lucky on these lunch bets. He's hot. You can't bet against him on these lunch bets right now. I think I've lost like 3 or 4 lunches in a row. I just paid you one back last week, and immediately I owe it to you again here. I guess I got to bet you steak dinners. Anyways, the bet yesterday was that I said Boeing could get down. I believe the price was 136.50. And it got down to one, or actually, yeah, I think it was 136.
You first said 137, and then I
No,
said
yeah, and
136.
then he wouldn't go, and so we settled at 136.50. And look at the low yesterday; it got down to 136.72. So within 22 cents, you Nike'd me because that's what you did to me on Nike T. You won the bet by 12 cents, then it came all the way back. So anyway, so obviously I almost snuck it in there. I almost got it back on you there. And then, Boeing just took off. So unbelievable turn of events there for Boeing. So I almost got the bet from you. It would have been really funny and then after the fact, and Boeing runs 7 points and I just snuck it in on you, but I couldn't sneak it in on you. Another lunch for Joel, but what a run. What a turnaround in BA.
Actually, a quick recap is you originally said 137. I said 136. Then you said 136.75 or something, and I said 136.62. So you only missed it by a dime.
Oh, I only missed it by a dime much. You just rub salt in the wound here.
All right.
Oh, I'm taking a second mortgage on my house to pay all these lunches.
All right. What else do we got?
It's 8:14, so let's take a quick break and let's grab Paul Uke. He's the co-founder of LifeSci Index Partners. He's the PM of the BioShares ETFs, BBC and BBP. So we'll be right back with Paul.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Alcon, along with Dennis Dick. We have Spencer Israel on the other side of the glass, and we have Paul Uke on the line, co-founder of Life Sci Index Partners and the portfolio managers of the BioShares ETFs, BBC and BBP. Paul, how you doing on this Thursday morning?
I'm doing really well. Thank you. Thanks for having me.
Love having you on. Great time to have you on as well. Before we go to individual stocks here, we got a little election going on next week. And boy, oh boy, Hillary bad, Trump, I'm not sure if he's good for anything. But just give us, your political angle. It looks like these issues have been under pressure. The more it looks like Hillary's going to take the White House.
Oh, yeah. I mean, biotech, healthcare in general, pharmaceuticals certainly are under pressure because of it. And it's really not just Hillary, but it's also Congress. So if you look at, imagine a scenario where the Democrats control both the Senate and the House, as well as the presidency, that could spell some serious changes for the healthcare system. And I think that's what investors are most concerned about. A Hillary presidency really has been an assumption. If we go back quite a bit in time, she's really been dominating the polls. So that will be a headline risk, and I think most people are getting their arms around the fact that probably won't mean material changes or material negative changes in the near future for the healthcare sector. It's more the risk of an entirely Democratic-controlled Congress that concerns people.
Paul, but don't you think, and you were making a good point, that we've kind of known for a while here now that's probably Hillary getting in here. Don't you think, that a lot of this might be priced into the biotechs? Because they've really, when you have been on an underperformer here for quite a while, especially in the last month when Hillary has really picked up steam. Even if you look at the IBB, it's down over 10% here just in about a month's period. And I look at some of the valuations on some of these biotechs and I think, man, even, if they do, do something with the price caps and stuff, like you'd think like a Gilead, like some of these things are trading with multiples of half of the market. Isn't there some value here?
Okay, so yes, absolutely. The sector on a PE multiple and a price to sales multiple basis is trading at extreme trough valuations. And you're right, the IBB has taken an absolute beating. If you look back prior to the first presidential debate, when it actually was close to neck and neck. I mean, I think it was Hillary at around a 52 or 53% chance of winning and 47, 48 for Trump. And that was right around, towards the end of September before Trump's first election debate debacle. Biotech was really looking good. I mean, we were near 6-month highs, 9-month highs for most of the major biotech indexes. And then as he sank, the biotech sector did trade down. So, I think that certainly towards the end of September, that Hillary's going to take the presidency if Trump allows her to take it from a legal vantage point. So I think that if, when this day happens, November 7th, 8th pass, and we have a new president-elect, I just can't imagine a ton more downside unless the Democrats take both the Senate and the House.
Let's jump into a couple of individual reports here from this morning. We were just talking Celgene here. They reported pretty good numbers. They had a nice pop at Biogen yesterday off of their report here. So far, so good. What did you think of the Celgene report?
Yeah, so you mentioned Biogen. I mean, that was definitely a sign of life for the sector. And, we've got a handful of large caps where people can actually focus on sales and not just political noise, right? And so I think it's good to see people focusing on what's actually happening in businesses. Celgene is one of the top growers among the large cap biotech companies, kind of a 20%-ish revenue growth kind of a name. And they had a really solid quarter. I mean, EPS came in about 10 cents higher than consensus. $1.48 was the consensus. I think this is usually a company that people expect to beat, and they did. It was very clean. So they did 158 EPS versus 148 expected. Sales also very solid beat, really across the board, and really everyone only cares about their main drug, Revlimid, which beat sales by something like 150 million, coming in at 1.9 billion. So really a clean number. Margins looked good, and so I think the outlook there looks good as well. Guidance was raised. It was a solid, very solid kind of a number. And so I think that's very positive for the outlook for the sector.
All right, before we get to one that reported today, Marvick in the chat, your thoughts on Amgen, AMGM, they report tonight.
Yeah, so Amgen is, I'd say one of the slower growth, if there is a slower growth company in this space. I mean, just to put things into perspective, you've got an S&P 500 that's growing, probably estimated around 4 to 5% over the next couple of years, and the biotech sector, certainly the large caps are growing in significant double-digit rates, in some cases 15 to 20% on the top line. So Amgen is a very steady business. They don't have a whole lot of, they have a stable of generally older drugs. People are looking for around 6% top line sales growth number. We think they're going to hit that. They've come in double digits, low double digits, most of the last, for the majority of the past few quarters. So I think we'll definitely hit that. And like you said, the multiples are very cheap. This is a company that's trading at around 13 to 14 times PE. A very low multiple for this stock, considering that the S&P 500 is trading at 17 times.
This morning we had Bristol Myers report here, BMY, and it is getting a 2-point pop. This stock has just been murdered ever since the drug trial there that Merck was kind of the beneficiary of. When Merck got the pop and Bristol Myers got the big job, this is now down 25 points from there, or about 33%. Do you think they're starting to get some value here in Bristol Myers?
So Bristol, this has been one drug that's been moving the stock for really the better part of 2 years, and that's Opdivo, their new cancer drug. It basically took the cancer world and the healthcare world by storm originally about 2 years ago with some fantastic data for melanoma, type of skin cancer. Of course, most of us on Wall Street really jumped to conclusions and extrapolated and said that drug will now be used in every type of tumor. It'll be the new chemotherapy. And, it was probably a little bit forward thinking. And when Merck and Bristol Myers data came out in lung cancer, it turned out that it wasn't so great. What we still have here is a very good drug. It's a very active agent. Sales this morning beat, Opdivo beat, total sales beat, EPS beat, guidance was raised. So we do have a company that's doing very well. Their PE multiple has now come back down to earth. This was a stock that was trading at over 25 times, close to 30 times at one point. Now we're back down to 18 times. So yeah, I think we're getting towards fair valuation, if not slightly cheap. I would love to see these big pharma names even cheaper. 18 times is still significantly more expensive than any of the large cap biotech companies we're talking about.
Let's take the flip side of the BMY saga, and that is Merck. Got the big boost, but still in a trading range. And now, after earnings here, it's starting to leak a little bit here. Give us your short-term, long-term, and short-term outlook for Merck.
Yeah, Merck is still trading at a PE multiple discount to Bristol Myers, so it's hard not to continue to like Merck here. Solid dividend yield of 3%. I think really good earnings trajectory because their cancer drug called Keytruda really surprised folks with how well it worked in lung cancer, certainly relative to the Bristol competition. So I do like Merck. I mean, I think among all the big pharma companies, this is one with real growth, with exciting top line news and clinical news ahead. Certainly, we're looking at other solid tumors where it might work at, and expectations are very low. Analysts are really only projecting flat revenue growth for the next year or two. And so that's, if we can kind of beat that bogey, I think there's a lot of upside and earnings leverage.
Another stock coming from the chat here, EW, Edwards Life Sciences, which got absolutely killed yesterday, down 20 points. Yeah. Is this one that you follow?
Yeah, absolutely. So, EW is one of these medical device names that it used to be about as stable as they come. They make, these different flap and valve type products for heart surgery. And it truly is as steady as she comes. Yesterday, they, everyone has a bad quarter. EW did have one of those bad quarters. So its multiple got whacked back a little bit down back to earth. Still a very expensive stock, trading at 6 times sales. I usually like medical device stocks closer to the 4 times number. So, at 6 times sales and 30 times PE, very expensive name. If this is one that after it settles out a little bit, hopefully we get a little bit cheaper. It's definitely one to put in the portfolio for the long term, for long-term appreciation.
You mentioned, heart valves. What a saga going on with St. Jude STJs. I believe they're in play here. We've been attacked by Muddy Waters. Is that who's gone after them for the heart devices? I
Yeah.
mean, you had one big sell-off on that, and then it's just kind of holding in there. And any takes on potential problems up the road for St. Jude Medical, which would have an impact on Abbott Labs as well.
Yeah, so St. Jude, as you know, as you mentioned, I mean, look, it's one of the highest quality long-term names in biotech. There are a couple of short reports out that come out every once in a while. This is a company that people always talk about being a takeout because they have a huge franchise across all of the different growth areas in medical devices. They started off as a CRM or a cardio rhythm management company, pacemakers and defibrillators, implantable defibrillators. They've now expanded to really most of the high growth areas. And what they really have is distribution. They have salespeople who have great relationships with every surgeon, every cardiac surgeon, every EP doctor really on the planet. So it's a very attractive business, great cash flow. It's still trading at a very high valuation. Could it be worth more on a takeout? It could be. I mean, I think that what you have here is a really strong execution team, a management team that's been around the business for a long time. So one that I would bet on. I don't really give a whole lot of credence to some of these short reports that come out from time to time.
Just about a minute or so left with you here. We've been asking you about a lot of the stocks that we're looking at. What are you looking at? What do you like right now?
Oh, great question. So I really am looking at, I think the last time we spoke, I tended to focus more on some of these very high, the SMID cap product company names, and we've seen a bunch of these taken out over the last 6 months, really over the last 4 to 6 months. We had Anacor acquired, Medivation, we had Xenoport, and that just shows how M&A is starting to come back into the limelight from the big pharma companies. Most interestingly, and I'll be real quick, I know we're running out of time. What we've seen over the last 2 months is some of these more speculative clinical trial stocks being acquired. So VTAE was acquired for nearly 175% premium. Tobira was bought for nearly a 1,000% premium, an absolutely absurd number also by Allergan. So I'm looking at some of these really cheap clinical stage biotech stocks that are left for dead. When people leave biotech, they leave these money-losing companies, often with unbelievable science, for dead, and I think we're seeing some tremendous values there.
We've been on the line with Paul Uke. He's the co-founder of LifeSci Index Partners and portfolio manager of BioShares ETFs, BBC and BBP, and a man that really knows the biotech industry. Great information. We hope to have you on a little bit after the election and get your take on these stocks as well.
Thank you very much.
All right, thank you. 828 S&P futures now up 8 points. We have cleared the yesterday's high at 2140. So far smooth sailing in the S&Ps. We already have a 15-point range, and folks, that 9-day average range is only 17.5. So this could have a big update here in the markets.
Let's jump to a couple symbols from the chat here before we go back into our earnings parade here. RTN, this one's interesting here. Just had Chrysostom, I think I'm saying the name right. That's a tough one to say. It's up $1.72 here in the pre-market, trading at 143. And RTN has been on a little bit of a run. If we look at the stock chart just in the last 5 days, it was $135 a week ago here. Now up at 143. Joel, give us your technical thoughts.
Well, they did have a decent report today, and they did raise guidance here. Actually, of any kind of charts that I am weak at, it's this kind of chart right here. A stock's had a run from 136. Now you're up, knocking on the door of the all-time high, 143.39. Boom, you take that out. You have to go with it. But, for me, when I see these kind of formations, I'm thinking short at 143.39 as opposed to just being an absolute breakout to the upside.
And then David B in the chat here is talking about your loser of the day, which is Community Health System, CYH. We got every analyst ganging up on the stock here today as well and either downgrading it or beating it up. But Holy cow, this chart is ugly, Joel. What was the news here last night? I'm assuming this was a bad report, Spencer.
They previewed their Q3 results. They see revenues at 4.38 to 4.84 billion, which it was actually 4.25 was the estimate there, so that came in a little bit higher. I'm actually not sure of the reason for all these downgrades today.
This thing's been in trouble for a while. I don't know
Yes.
why you had the big down day. I mean, 2-for-1 stock split here. Maybe not quite 2-for-1. I'll just give you the pre-market low of 622, kind of getting a bounce. And what was that stock earlier in the week? It opened up like under $2. It was a biotech stock, and that thing was just straight up. Can you guys help me out with that? It was on Monday or Tuesday. It went from 13 to $2. Traded 190 in the pre-market, and
Goldfish. I remember the stock, but the ticker symbol. The chat's probably gonna be able to help us with this, though. So
yeah, yeah. I just, for me, I see these kind of stocks kind of like the opposite of that RTN chart, where like I'm selling at all-time high. I see a big drop like this. I'm more inclined like to bring in a short. I don't know how bad the news is.
Yeah, hard to just come in here and start buying it. And this is one too that was in play a little while ago, and you can see the big spike back on September 16th when the stock went from $10.52 up to that 13.28 high. That was when it was reported that they were exploring a potential sale. Obviously, that never came to fruition, and that's the danger of buying companies sometimes. When that you think they're going to get taken over, you get some people that are speculating in there, buying, and here we are a month and a half later, nothing ever materialized, and now all of a sudden, you got a company announcing disappointing, potentially disappointing numbers for next quarter, and you got the stock trading down $3.50 here in the pre-market, or 30%. So here it is at $6.71. I think I saw, I don't know if it was Mizuho. Spencer, can you help me out? Was it Mizuho? Somebody put a $2 price target on this last night, and I'm trying to just see where that report was. I saw it go by in my timeline. I can't find it here now. Bear with me here. I just want to find out who that was. Spencer, if Spencer's got me,
No,
I'm going in and checking mine too.
I was actually just looking up CYH.
I'm trying to look it up here too. I thought I saw. Okay, no. So it was Mizuho, and they cut it to underperform, and they put a $3 price target on it. So $3. So you got somebody that's really bearish on the street. Stock's still trading 672. You also had Baird cut it to underperform there last night as well after this news. They lowered the price target to 8, so they're a little bit high because I think it's at 672 here now. Mizuho at 3, so there's a lot of people who are very bearish this on the street.
If I could offer some more color for the Q3, their Q3, they do see revenues down 10%, which is probably the reason for all this.
Ugly.
Buy Apple with the help out here. That was DPRX.
That's what it was.
Yeah. Traded 170. Yeah, traded over $3. So there, just 170. That was your low. That was back on Tuesday. We had that trading action.
Quick and balanced look before we're going to go grab our next guest. Wells Fargo, 109,000 to buy. You know what's interesting is Wells is starting to finally show some life here. I mean, the stock was straight down there. We know the debacle with the fake accounts. Then it came back, just looking a week and a half ago, and tried to get down and retest those lows. Didn't even get to the retest point, and then started taking off here again. So value investors are starting to come back into Wells Fargo. Are you interested in this at all, or is this just still too much headline risk on this one, Joel?
I don't know. I think this is not the same kind of headline risk that that CMG had.
CMG, we haven't talked about that yet.
Yeah, I know. We got to get to that here in a second. I don't know. I do have some financials in my portfolio. I don't know if this would be the next one I would add to it. 46 looks like a nice level here if we can clear and hold above 46. Also 51 to 44, let's call it 3.5. You still have some range to get up here, 47.5 area for 50% retracement. So looking at it technically, not that interested in it fundamentally.
Let's go take a quick break here. We're going to talk some pot stocks with Alan Brockstein. Been a while since we had Alan, so let's take a quick break. We back talking pot.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. We are live with Alan Brockstein. He's a MarketFi maven and the author of the 420 Investment Letter. Alan, how you doing on this Thursday morning?
I'm doing great. Thanks for having me back.
All right, so yesterday in the chat, some people are saying, hey, what about the pot stocks here? And there's no better person to go to in this sector than you, so glad you could come on. Got a little election coming up here in the next week or so. Maybe that's getting some people excited about the issues. Got to give us the implications from both candidates taking the White House.
So it's not about the presidential election. It's really about at the state level. There are 5 states that are voting for full legalization. For those that haven't been following, the first 2 states voted in 2012. That was Washington and Colorado. And then we added Oregon and Alaska. So it's been kind of a West Coast thing. This is going to really complete the West Coast if it plays out. You got the big dog, California, Arizona, kind of out there on the West Coast. It's adjacent. Nevada. Those are the 3 on the West Coast that could all go legal. And then I think a real game changer is we have 2 states on the East Coast, Maine, which is not as important as Massachusetts. And what's really important about Massachusetts is its proximity to other large population centers on the East Coast could really move other states in the coming years to move towards legalization. In addition, there are 4 ballot initiatives for medical cannabis. If you recall, a couple of years ago, Florida failed. It was close. It required and it still requires a 60% majority there. But that's on the ballot this year, and it's looking to pass. And then there's 3 other, I don't think they're super important in and of themselves, but 3 additional states, Arizona, North Dakota, and Arkansas, North Dakota, and I'm blanking out on the fourth one.
Is it Jersey?
No, it's not. They're already legal. It's, I think it's Montana, which is already kind of legal anyway. So it's really about the 5 state legalizations.
How can you be kind of legal? I got to hear that.
Well, they have a program. It's to make it bigger.
Okay.
Yeah.
So candidates here, you've got a few just from a Benzinga article there yesterday, and Spencer can post that in the chat for everybody to read it as well. You've got some stocks here on your radar that you're looking at here. Tell us about a few of these stocks. We could start at the top of the list. American Cannabis Company, AMMJ.
Sure. So, well, let me just back up a little bit.
Sure.
A lot of people listening probably aren't familiar. First of all, this is, I've been following this market for almost 4 years, and we are in the middle of the second boom. The first boom was something like I've never seen in my life, and I don't expect to ever see again. But the cannabis stocks, it was just a feeding frenzy when Colorado opened their doors on January 1st, 2014. And the market started to take off about December 11th going into that. And from December 11th to March 18th, in those 14 weeks, the stocks were up about 15-fold. It was amazing. So what happened at the time was there weren't that many stocks, and there were a lot of people that just flooded in the market. They were naive. They didn't really understand the fundamentals, but they knew that something was happening, and they just bought stocks. The stocks were going up. It was a momentum trade. So all year I've been telling my subscribers that we were going to have a similar, but not to that magnitude, type of move based on all these elections. And so I published, that article that you shared was based on some things that I discussed in my monthly newsletter that was published on August 31st. So I just wanted to get that out there. So what I was saying then was that we were going to get a lot of eyeballs on the sector, and that we were going to have a similar type of reaction, except people have to understand that, first of all, there are a lot more stocks today. Back then there were like 20. Now there's like 400. That's the first thing. Second of all, whereas a lot of the people coming in the market were brand new to investing in the cannabis sector, today there are a lot of bag holders from a couple years ago. So there's some overhead supply from more companies, and also stocks that were bought in 2014 that basically had been ridden down to zero. So I just wanted to get that out of the way. But the first one you just mentioned is on my focus list. I think maybe all the ones he mentioned. I have 24 stocks out of the 400 that I follow most closely. And that one It's a consultant. Honestly, there's nothing that special about the company, but investors are favoring names that have the word cannabis, canna, marijuana, things like that in their names. So really benefiting from that.
Now, this stock is up in the last month. It's went from like 25 cents up to 82 cents. So big pop already.
Yeah, it was pretty funny because I was loaded up on it, 10, 11, 12 down there. And people, I don't think really believed me. I said, I think this can take out the April highs and maybe get to 40 cents. So
It went to 80. Almost a dollar.
It went to $1.01. So,
Wow.
but so the market cap there, it has about 50 million shares, and the revenue run rate, they're not cash flow positive. They don't have the revenues to justify the valuation. So it's going to end sadly. I think for people coming into the market now, I've been warning my subscribers to be very careful. We're kind of late stage here. I've been sharing some insight about how far it'll go and how long it'll last, and I'll just warn everybody, not a lot, but I think it still has further to go.
It's always scary to chase a stock when it's went up, 300% in the last month. Like, where's the top? It's
right,
because bubbles do happen.
But that's it. It's a bubble.
All right, moving on here. Got to talk about the best in breed here, GW Pharma. All these takeout rumors and everything. Discuss that stock. What
Yep.
do you think the implications?
This is the Cadillac of the cannabis sector. It's more of a biotech stock. Very good company. As a matter of fact, it's giving up its dual listing, so its only listing will be GWPH. It went public for that dual listing in May of 2013 at, I don't know, $8 or $9 a share. Kind of sat there for a few months, and then it really took off after Sanjay Gupta's reversal in the summer of 2013, and it never really looked back too much. We've talked about a lot over the last couple of years. Got ahead of itself, when biotech was really hot too, in the summer of 2015, and then, gosh, the fear of failure really set in, and the stock dropped to as low as $35 or something, something like that. And I was hanging on for dear life. They've had nothing but good news this year. The only bad news I would say has been just a little bit of a delay in when they actually expect to file for their drug. For those that aren't familiar, their lead drug now, it was not their lead drug 3 years ago, but now it's called Epidiolex. It's an extract from cannabis, so not like a synthetic drug like a lot of other companies are trying to get through the FDA or talking about getting through the FDA, but it's a true extract based on CBD. That's the vast majority of what's in it. They've had remarkable results in terms of controlling seizures in rare forms of epilepsy that are not responding to other drugs. So I like the stock. I have almost no position right now. I see what's this mania going on. They don't benefit from this mania at all. They're an FDA company. They're not a state legalization company. So, but that's not really the issue. Had that gap up the other day. I'm actually maybe even this morning looking to add a little bit. We're back into that gap. When it gapped up, I sold almost all. I've had a core holding in this ever since I started that model portfolio in 2014. Never have gone to zero, and I've had as much as 20%. Right now I'm at 2%. So I think in the long term, if they get this drug approved, and that we'll probably know about that in early 2018.
Wow.
I think the stock could go to like 180. That's kind of my expectation. Wow. But, it's really tough, these binary things with the FDA. And we saw how worried people got before that first clinical trial came out in March when the stock was sitting at $35 and then game on. So I think it's a good path ahead, but I'd be a little bit cautious near term. One positive, I'd say, for anybody looking to trade the name, they're going to be featured, I believe, at the American Epilepsy Society meeting in early December, which is actually in my hometown of Houston. They'll get a lot of attention there. And I think finally some of the data, they've released 3 phase 3 clinical trials, but they've never really shared the fine details of those clinical trials. It's all been top level. So there'll be a lot of discussion about this. And I expect it to be pretty favorable. And there'll be I think that'll be a good trade. So I am looking to increase exposure in the next month or so.
A couple other ones here on your radar from that article. The Cannabis Science, CBIS. This is a low-priced one. It's only trading at just under half a cent.
Yep.
Stock, though, has had a lift. It went from 2 cents up to 7.5 cents. It's pulled back, kind of almost to that 50% retracement. What are you thinking about it at this price?
All right. Well, first of all, this is a total scam.
Oh,
Remember I said,
okay.
yeah. Well, let's just get that out of the way. So this is one of those companies that has
Scam
cannabis
stock.
in the title. So of course everybody knows what it does. This was actually the second publicly traded cannabis stock. Came out, I think, literally days after the first one in March of 2009. They've done nothing since then except one thing: dilution. They've never really accomplished anything, and a lot of insider selling there. They'll issue press releases, and the insider selling will go right after that, which I think these people should be in jail. I'll say that, just my personal opinion. But so yeah. But with that said, this is the kind of market where I've had to talk to my subscribers about, like, look, if you want to make moral judgments on companies and not trade them, that's fine. But I'm trying to find opportunities. I actually thought that stock would go up, not as much as it has. We did a trade in one of my two model portfolios that's more trading oriented, and I think we paid 1.4 cents and got out at 2.2. I was looking to buy it back at 1.9, and it got to like 1.93. So I missed that one. This is another one that it's had a history of these flash in the pan rallies that just fade, and that'll be the same this time, in my opinion.
Hey, Alan, this is Spencer. Quick question for you. Before we let you go, what are some maybe like second-tier stocks that people aren't looking at right now that you are?
Well, first of all, it seems like they're looking at everything. So it's really hard to, I get that line of question. It's like, all right, we see all these stocks that have gone crazy. What's one that maybe hasn't gone quite as crazy? So I'm going to just stick to the stocks I follow the most. There might be some that are off of that list, but two that come to mind, and they have both rallied, but I think it's important to understand why they were late to the game. Those two are alphabetically, one called Indoor Harvest. Now, it suffers from not having cannabis in the title, right? So nobody knows exactly what it does. But this is a company that actually has some really neat technology. It's called aeroponics. They're in both the cannabis market and outside. They're kind of a startup, so they don't really have high-level sales quite yet. They, like a lot of these penny stocks, engaged in a pretty nasty financing, convertible debt that they said would never convert. Of course, it did convert. Put a lot of pressure on the stock, but this is one. After it was all said and done, the CEO stepped down and will be the chief technology officer. So there's a management change. They were able to refinance the debt, so there's no longer this ticking time bomb. The CEO gave back, I think, 1.2 million shares, if I'm not mistaken. So the market cap here is like under 10 million. Actually, it's a lot under 10 million. It's more like 7 million right now. And they have a partnership with Canopy Growth, the largest company in Canada. A lot of promise. So that's one. I think it was kind of late to the game. It went in the wrong way when the rest of these other stocks were rallying. Another one is Massroots. Massroots has been kind of a favorite of the crowd over the last couple of years, but it hasn't performed very well fundamentally or the stock price. Same story. They had a convertible note that blew up on them. But at the same time, they also did a $5 million capital raise at 50 cents a share with 90-cent warrants. So there's been a lot of technical pressure on that stock, and I'm not as confident long-term about them. Massroots was the company that tried to uplist to the NASDAQ prematurely earlier this year. And they're a social media site. I do like what they're trying to do. Facebook, Instagram, these big semi-anonymous, closed system that if they do things right, they should be able to get a lot of advertising dollars from cannabis companies seeking to connect with their audience, which I think this is an inflated number, but it's about 900,000 people. I'm one of those people. I never go to the site really, so it's 899,999, but it's actually lower than that. But still, same thing. This is the kind of company that hasn't yet doubled, tripled, quadrupled, that there's probably an opportunity. But, this is the greater fool game, so be careful. I feel more comfortable with that Indoor Harvest with the market cap at 7 million as opposed to Massroots, the market cap on a fully diluted basis is probably at, what is it right now? About 80 cents. It's about $65 million.
Getting a couple questions from Canadian pot stocks, and I know you've
That's where
followed.
the good stuff has been. Yeah, and
Oh,
if you guys
that's where the
listen
good
to
stuff
me,
is. Well, I've got.
that's the invest. When I started 420 Investor, that was premature to use that title. I should have called it 420 Trader. We've talked about this for a while. It's just, unfortunately, the real cannabis industry isn't in these penny stocks. If you do some due diligence on who are the real players in the cannabis space in the United States, they're not the ones that are trading. A lot of the ones that are trading are just outright scams, and not all of them, but in Canada, they have, it's a much better environment. You have federally legal medical cannabis. They're about to go fully legal, and national licenses. So these are really investments. I'm not saying right this minute that you should just go out and buy them, but this has been really, thankfully, for my community, we've been really focused on this year.
One just in specifics, because it's actually headquartered in my hometown, Leamington, Ontario. Afria. I have a lot of. It seems like everybody. Whenever I talk to somebody from my hometown, they're like, "What do you think of Afria? What do you think of Afria?" I was like, "I don't really follow the pot stock," so I was like, "I got to ask Alan Brockstein if he follows APH on the Toronto, which is
Sure.
Afria."
And you know what? This is a great company, in my opinion, and it's really, it shows the promise of when you have good capital markets. They've raised just a ton of money. Being federally legal sure helps with that. They came at this, and I went up and visited them May of 2015. Have stayed in really close contact with them. Their business model has transitioned a little bit. They used to be their model. Well, first of all, their goal is to be a low-cost producer. They operate a greenhouse that they're expanding. They just bought a lot of land, so they'll be in the expansion mode as the country moves towards legalization. So these guys were growers primarily. The founding partners have grown flowers and produce. That's their background, and so they've had to learn to grow cannabis. And maybe there were some learning curve issues there, I would argue, but they're one of the largest in terms of sales. They were acting as both a wholesaler and a retailer, but they're moving away from the wholesale market, more towards just retail, because they've built up strong patient alliances. They actually, this morning, some interesting news out. They are the first licensed producer in Canada to actually take a stake in a U.S. operation. They just invested 5%, and they also have a 5% royalty because they're using their IP to help a very large project in Arizona that just hit the tape this morning. So it's a good company. This was the one the day after Justin Trudeau was elected last October, a little over a year ago. This is the one I said, this is the one to buy. It was at $1. So now it's up around $4 in Canada. And by the way, in the last several months, they've gotten a real U.S. listing. APHQF. It's APH in Canada on the TSX Venture. I think they'll be uplisting to the TSX, would be my guess. I'd be surprised if that doesn't happen in the next few months. But it's harder for me at $4. It's about a 500 million market cap to really just say pile into it. So I have a model portfolio for just the Canadian licensed producers, and I have a slight overweight in Afria.
All right, we've been on the line with Alan Brockstein here, and he's the author of the 420 Investment Letter. Marijuana sector heating up again. Alan, I have a feeling we're going to be calling you a little bit more often. Thanks for coming.
I hope so. It's always fun to talk with you guys.
Yeah, you know your stuff, so we're going to get you on. Alan Brockstein, 420 Investor Letter, here on Benzinga's Pre-Market Prep. Thanks a lot, Alan. Have a great day.
Good talking to you. Take care.
Thanks, Alan.
Alan is really, he tells it like it is, Dennis, with us, some of these stocks. And I think, what happened the first time with the run-up in these stocks, a lot of people, the government, basically came in and shut a lot of these companies down. And there was no way. Maybe now regulatory things are getting a little more squared away. But a a lot of caution and a lot of a lot of skepticism about some of these issues. So
What you see, and this is typical of any new industry, and the pot stocks are in a new industry, is you have a lot of people, a lot of, people who will do scams and do different things, and there's newsletter scams, all kinds of other stuff. So, it was all about, and 2 years ago, there was a lot of good companies in there, but there was a lot of scams too. So you had to really decipher through it. And that's why, somebody like Alan Brockstein, to have him on, he can decipher through a lot of this stuff. And, even the FITX one, which, was in Canada there, he was skeptical of that one the whole time. And that was a big, scam that turned out to be too. So, obviously Alan's not going to get them all right here, but he does a pretty good job. And if I was, whenever I'm looking at investing in pot stock, I always throw Alan an email, if I'm looking at that, because he knows the sector so well.
all right, so from biotech to the marijuana sector here, Dennis, we got a couple minutes to wrap up the show. S&P's just climbing the wall that we're here, up 850 at 2142.50.
Yeah, and we've had a lot of good earnings reports here overnight. I mean, you got Tesla trading up, you got Twitter trading up, you've got a lot of, you got your Celgenes, your Bristol Myers. So overall, where we were looking was a weaker day. Maybe yesterday we had some disappointing reports. A lot of good reports here overnight. Like we said, 247 stocks reporting today, though. So it's just a ton. We're going to get some big ones tonight too. We're going to get Google, we're going to get Amazon, we're going to get Amgen, we're going to get Baidu, we're going to get Expedia. But first, let's just preview just the Amazon and the Google. Let's do some technicals on these ahead of, because obviously these two companies are going to report tonight.
Oh man, you have to give me $1,000 stock and an $800 stock. Okay.
There you go. Start with the $800 stock, Amazon.
I'll just give you one number in the Amazon, 847.21. That's the old time.
Both $800 stocks.
Yeah. Oh yeah, you're right. But they're both going to 1,000. And you have Google. Google A, or just Google, the straight Google all-time highs. That's what I'm keeping an eye on. And then you got those reports, so those things can move, and also the premiums. Those things are going to be very, very wide. Dennis, before we go, did we talk CMG yet? Or not?
No, we haven't. Let's do it. Let's talk CMG. And there's an article, and we were talking. Both of us talked about this level. We were both kind of wanted to short it. We were talking on the show, and I was like, so hard to short it because it's bounced off there every single time. But I'm like, if this thing starts trading through 385, 384, I said it yesterday on the show, it could be at 350 in a heartbeat. And it didn't quite get to 350 yesterday, but it got to 362. So it fell 20 points after taking out that support level. And this is just shows you a classic technical breakdown. Everybody, has been, buying at that low multiple times. They're trying to pick the bottom. And this time they got hurt. And everybody's scrambling for the exits, and that's where you get the flush. And it was the flush, a 20-point flush, as it cut through that support level there throughout the day. And I still think this thing could see 350 here. I think it's broken now. I don't like the multiple on the thing. I don't like the fact they're not growing earnings anymore. I've hated the stock for a long time. I hate it even more now.
A couple things with that. One, you just had to close your eyes and short it off the open. I mean, because there was opened gap lower, 87.24, went up to 88.85, and probably very little stock traded. I did look at the options on those things, and I mean, you could drive a truck through those premiums. So, yeah, and Bob Wire, you're thinking along my lines. You know what really the kiss of death for this stock was? Is when Ackman got involved. I mean, here's another one where Billy Ackman is just, you got that. That might have been the last pop, one other pop to 440 there. Now it's breaking down here, so be careful on the long side.
Ackman, the kiss of death. Has he done anything right? I mean, he buys up there in his 440 and gets the Ackman pop, and he's just got such bad luck going right now.
Yeah, I guess his Mondelez, but he sold some of that a while back, so I don't know. It happens to us.
Oh, he's had it rough.
It happens to the big boys as well. 859. Let's go to Spencer to preview the final show of the week.
Wow, that was a jam-packed show there. We got Phil Davis tomorrow. He's the founder of Phil's Stock World. Haven't spoken to Phil now in a few months. We love having him on, so looking forward to having Phil. I don't think we have as many stocks reporting tomorrow, so I hope we'll have a little bit more time to talk a little bit more about some of these issues, because it is a jam-packed show within 1 hour. If you missed any part of our show today, you can listen to the whole thing again on our podcast. We're on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or PreMarket. I hope you enjoyed us on YouTube Live, by the way. You can also listen to the show on YouTube Live. It's live to record there, so I think I put the link in the chat. If not, I'll do it again right now, but we're on YouTube Live. As well, that is now the source of our streaming, so that is another option for you. Also want to remind you about Benzinga Pro. You can get it for free for 2 weeks. Just go to pro.benzinga.com. You can also call us 313-960-4070. Just say that you listen to the show, and there is a discount involved for an annual subscription to that. I want to just say that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. And there are only a few spots left for Joel and Dennis's 2-day trader workshop. If you just Google Benzinga 2-day trader workshop, you can get to the Eventbrite page that way. November 11th and 12th here in Detroit. All right, I need a break after that. That hour, pretty jam-packed. Hope you guys found it informative. Hope you learned a little bit from each of our interviews from Paul and Alan. And I hope you join us again tomorrow morning. Have a good rest of your day, everybody.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.